Hello, everyone, and welcome to NowVertical's live corporate webinar. This is David Vidala from RBMG. NowVertical is listed on the TSX Venture Exchange under the symbol NOW. Joining us today is the company's chairman and CEO, Daren Trousdell, who will be going through NowVertical's April investor presentation, including an overview of current operations and upcoming milestones. At the end of the presentation, we will open it up for questions for management to address. If you are interested in asking a question and are logged into the Zoom app or web platform, you can submit your questions to us directly in the question module. Please note, this presentation is being recorded today, Tuesday, April 12th, 2022, and will soon be made available on the company's website at nowvertical.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. You can also view NowVertical's entire disclaimer on page 2 of their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Daren. Daren, the stage is yours.
Thank you, David, and welcome everyone today. I'm going to walk through the NowVertical story and give some key updates, as David mentioned. NowVertical is a publicly traded software and services group focused on building a network of big data AI enterprise software led by industry experts. We deliver data governance, security, process automation, predictive and prescriptive analytics solutions for our customers, all resulting in allowing our customers to have the confidence to make bold data-backed decisions in their enterprise. We've been moving very fast in building the NowVertical story. We went live on the TSXV on July 5th of 21 last year. In total, in the last 16 months, we've acquired 8 companies that give our group TTM adjusted revenues of 30 million, a large portfolio of growing customers, now over 100, in 7 core verticals with 300 plus employees globally. Our stock went live at $1, and through the last few months, with choppy markets, we've held in the 85 cents to $1 range with our stock. We are bringing the market what we call vertical intelligence through a software and services offering. Vertical intelligence is providing tailored solutions in industries that we have the specialty and expertise to do so. On the software front, that covers in our unit now origin, data security, data discovery, fusion, and mobility. So that's really understanding your data, governing and securing your data, and mobilizing it for use. In our now analytics offering, that is allowing you to do the predictive prescriptive analytics with your data so you can find critical insights to answer big questions, solve big problems. The use cases are endless, and we'll talk about some as we move on. And at the top of the data maturity level is our process automation tools that are allowing the more predictive and automated solutions, kind of moving towards AI in the future in core industries, which is really one of our key differentiators, which is tailored solutions. And we believe that AI is only relevant and only useful when tailored and customized for specific industries those solutions are in. And we're finding a problem in the market that there are solutions that are talking about AI in a general sense. It's not a generalist solution, it's very tailored, and we offer that for our customers. And the core verticals we focus on in both our software services offering is in government, automotive, media, commerce now, which is our latest vertical, energy, oil and gas, and financials. We do the same on the services side of our business. So we have 2 types of offerings. So software, which is either subscription or SaaS based. And we also have managed services contracts with our customers that help to customize, tailor, integrate, and manage the solution, covering everything from data generalists, so putting people into our customers to help do the data analysis work, do the data integration work. Then there's our intelligence and integration expertise. That's the more analytics, the analytical side of the business, where we can staff or train our customers' needs across the full spectrum of analytics. And then there's the deep kind of industry services that we provide that can help add that future forward automation component to what we're looking to do with our customers. So our customers today, like I said, across these core verticals are very large. We have large US government customers, large enterprise customers like General Motors, Chevron, some major names that we all know. And what's really unique about the Now story is we, in our fast growth, are very internationally focused as well. We have a large presence in Latin America, US, Canada, in Europe, in the UK, South Africa. So we're serving customers all over the world across the spectrum I just mentioned, which is a very unique kind of part of our focus and differentiator that we're highlighting. Just to make kind of everyone understand some applied use cases with our customers, one of our larger customers on our Now Origin business is GM. And what we provided for GM for the last few years is our data fusion software, which GM had a major issue coming out of a catastrophic event in their product line, which was an ignition switch failure. And they needed to come up with a way so that they can understand how these issues are occurring, where these issues are occurring in their product, and how they can solve it before they ever get to market. So we were brought in alongside another major vendor, and we won the assignment and helped GM bring together 50 of their databases of structured and unstructured data, structured data being basic spreadsheets, any kind of data in structured form, and their unstructured data, which is social media chatter, audio, video, scanned documents, the more challenging stuff where it's quite abundant. And at the time, GM had about 2 billion records, and we fused them together in one unified data model that could be analyzed, searched against, and managed by their in-house team of, formerly they were called readers. And we helped GM upskill their team so they became analysts, so that there was machine and human analysis of this data. And the solution to the ignition switch problem was always in their data. And we like to kind of show how 3 data points really got to the answer for GM, which was, a YouTube video, an OnStar audio call, and a parts spreadsheet from a few years before. When you connected the 3, they identified that the ignition switch was failing because there was weight on the ignition switch in the fuselage, which was dislodging it, which was always in their data as a known issue, but they could not find it on an independent basis. So with our fuse model, they're finding solutions, or they're finding problems and solutions in real time, going from months, years, never, to days, weeks, and always now. So we've really helped them build a safety apparatus with our software enterprise-wide globally. And then on our analytics business, we have a lot of media customers using our Now Affinio product that help to identify audience profiles that can give them the insight and data to help make better content creation decisions, ultimately investment decisions, and better customer experience. So our data is used on all things from, what types of trending content are people watching? Is it sports documentaries? Is it romantic comedies? And how can that influence the amount of content that's being created, when it's being created and released? And then how is that informing an individual customers or segment of customers recommendations so that there's more time spent in the property, creating more value for subscriptions? So our use cases are very diverse, spanning multiple industries, but they all have something in common, which is we're allowing our customers to get the most out of their data. And that's a real specialty that Now has, that we're bringing to the market in core industries where we have the right to win. We've built the Now story through M&A, and through the rest of this year, that theme is going to continue. So we've done 8 acquisitions in 16 months. We are planning to add another 3 to 5 the rest of this year, ultimately to get to a scale and size of our business that will be relevant to a much larger capital markets program that we intend to launch next year in the U.S. markets. That where our story, we believe, is most understood, as seen by our competitive set and how well they've done even in choppy markets. So we have built in a very short time a pedigree of identification of target, negotiation, purchase, integration, which is really setting us apart from our peers in the industry, and giving us an accelerated path to substantial revenues and future profits. Our current set of transactions, one data point I like to highlight is every deal we've done on a consolidated basis, including future earnout payments on whatever specific deal terms there are. We've purchased everything at an average of a 6x EBITDA multiple, including future consideration, as I mentioned. So we are really performing well on the purchase side of the house and integrating very well. And we like to highlight that because it's germane to our story, especially right now. As I mentioned, with our kind of vertical intelligence model, we buy 2 types of companies. We buy software companies, subscale software companies historically, that have great products. They fit problems in the industries we see with our customers. They can scale in a better commercial model, which is what the now story is really about. And we also buy services companies who are the leading problem solvers, either geographically or in specific verticals that provide solutions to customers. The difference between the 2 types of companies is one owns IP, and we've found is revenue constrained. It's hard to scale software companies generally, whereas services companies are not as revenue constrained, they're margin constrained. So our gross margins on software are far higher on that front versus services businesses. But when you bring them together, you address the software problem, which is fast scaling revenue opportunities, and you address the service company problem, which is margin profile. And we believe we've created a virtuous value model with this approach across a very, very large market. And in our belief is, the big data AI world for us is a $500 billion market in the next couple of years. So it's a very, very large market that we can serve and solve many problems against with this approach. And because of this approach, we also have a fragmented market where there's a smaller amount of large, larger scale, larger cap names in the public markets, but there are thousands of small to mid-size, small businesses that are doing work and doing specialized work every day that fit into our market, creating a fragmented opportunity that, we're naturally positioned now with our current size and our current approach to consolidate that market. And we've been doing that very successfully, and we will continue to do that. So we have a defined approach in the marketplace that we use, which is a cash equity purchase approach up front, with deferred or earnout consideration on each of these targets so that we can get some predictability on earnings. Every company we're buying has a particular margin profile we're looking for on both gross margin and EBITDA margins. So we are really focused on either buying existing EBITDA positive businesses or ones we can engineer to be positive so that they're accretive in our platform today, which I think is a really good position we put ourselves in and good for the future. We've also built a management team that we believe is purpose-built for building this story and where we have a right to win in this space. And my background is now both private and public, mostly private, building from scratch, amalgamating great companies as well. I sold one of my businesses to a group called Aegis Media, which was a London Stock Exchange company, a very large global consolidator in the advertising media space. They were ultimately bought by a group called Dentsu in a multi-billion-dollar transaction. And, while I was with the company in North America, we led many M&A transactions, which was really our core job. My focus was mainly in digital. We did about 50 transactions in the $5 to $500 million range. Sasha Grujicek, our COO, he worked there as well. We had many assignments, not only on buying the companies, but integrating them, making them work across the group, which we were very successful at. Terry Anderson is our group chief financial officer, Canadian Pubco CFO, great experience across governance, board management, reporting issuer. So we have the team in the financial side built to kind of lead a group kind of consolidator model, which is both, from finance, FP&A, legal, in-house legal with Andre Garber, who's ex-Fasken and Denton. So we run our own legal processes in-house. We have a centralized marketing group under Cody Shankman. And then the rest of our business, which is now Origin, now Solutions, and now Analytics, has leaders like Fareed Kassam and Dave Whitmire leading the company there. For a company as young as we are and as fast as we're moving, we have a really great board. Daryl McMullen runs product and platform at MasterCard. Scott Nierenberski is the CFO of MCI One Health, who's ex Credit Suisse, Deutsche Bank, Intel Capital. Elaine Kunda is a well-known Canadian venture capitalist. And John Adamovich is ex KPMG, Paul Corporation, and Aeroflex, which are two kind of large, M&A driven companies as well. So a very, purpose-built board for the future. And just on the kind of looking at our market competition, we're really laser focused on three companies in the public market space that we look at as large peers, aspirational peers, where we see us building and getting to. And it's an important part of our story. We see companies like C3.ai that are, going to do just over $200 million in top line, are still trading at healthy multiples, whereas a Palantir, and an Alteryx are now both at double digit, forward revenue multiples. And in Canada, as we're building this early stage, we're value priced right now at roughly just over 1x sales. So we believe that we're going to be a great opportunity for investors as we work our way towards this and getting to this, peer set in reality, not just aspirationally, is in front of us. And we believe that is really going to be getting to 100 million plus in revenue. That's really what our goal is. And to get there, we've already built an enterprise that's almost halfway to that goal, both strong from an organic growth perspective and also an inorganic growth perspective. So we see continuing to organically grow the assets we've bought already, while adding some very specific M&A transactions to get us to that 100 million. And we see it in front of us. And what that looks like is today, we're on a 22 target run rate of about 40 million top line right now with the group we have. So that's substantial organic growth from last year to where we are today on a pro forma basis, which we're really excited about. That's representing roughly, just under 40% growth on the existing business. And then we layer on the new M&A transactions that we have planned and underway. We see this 100 million number happening, and we see a path to it. And that's the trigger point for us to kind of enter the US market conversation going into next year or early next year. So that's what we're most excited about. This is what we're putting our heads down, working the hardest against. And we believe this is enough scale to matter in that peer set that I covered. So this is what we're all about. We've delivered exceptionally well in an extremely short amount of time. We have incredible assets today with future growth tied to them. It's already representing incredible growth. And we've got the team to do it. So, we're expanding our team right now of, trying to get the best investors into our story to back the story because it's in front of us and we see it, and we're trying to make this simple and clear. And we hope it's compelling enough for everyone listening in today, because we truly believe in this story. One more data point that I think helps align us in a clear way with our investor group, and the ones we have already understand this. We have heavy insider ownership in the Now story. The company or the team, the insider team, is about 50% of the entire company, and I'm a large part of that 50%. I think roughly just under 40%. So we have very, very deep alignment with our shareholders. This is a shareholder-driven company. We are building a model that will create fantastic return potential for our shareholders, and that's what we're trying to promote right now, is getting the story and how this will compound in the future out to the marketplace. So with that said, I'll close for questions.
Thank you, Daren. If you're interested in asking a question and are logged into the Zoom app or web platform, you can submit your question to us directly in the question module. While we take a minute for the queue to develop, we did receive a few questions prior to the event, and we'll address them now. All right, Daren, you ready?
Yep.
Question 1. What synergies do you expect with the recent acquisitions, and where are you seeing early success?
So the immediate logical synergy, when leaving aside cost efficiencies, which is not as exciting, is our large customer portfolio right now is untapped from the other parts of our business. So that could be geographically, it could be product wise. We have not fully we haven't even come close to extracting the value out of the existing customer set. So we see a huge organic growth potential through end of 22 going into 23, which is extracting value out of that customer set.
All right, great. Staying with that, once you close an acquisition, how long does it take typically to start generating organic revenue from the adoption of Now branded common software?
Yeah, we're on the revenue synergy side. We think it's about a 4 to 6 month process for that to come through, which is really just making sure the new company understands the group offering. The group offering is made available to that company. So it's about a 4 to 6 month happening. We don't expect, and we're not really presenting the synergy benefit or the organic synergy benefit in our numbers until 23. So the growth that's happening in our numbers right now is really the existing company's own growth.
Thank you. So how do you see NowVertical stock price today as it relates to the underlying value of the company?
Well, that's a loaded question. We think we're highly undervalued.
Fair enough. Okay. Next question. What are the margins currently looking like on your business as a whole and on the service and software sides?
So the software businesses are very, very consistent in a 80% plus gross margin profile. The services businesses are naturally a little lower. We look for about a 60-65% target window. So we've seen some of our companies come in, or we're seeing new targets come in a little lower than that, but we know how to optimize them to meet those kind of thresholds. Our hope and our work in the group that needs to be done is to get the entire group at a 65% north number.
Okay, thank you. Given the recent decline in public tech valuations, are you seeing acquisition prices looking more attractive or too early still?
I think things are going to get better than ever. I think the public market tech kind of, softening is one thing in the public markets, which again, in our industry, even though these, names I've mentioned are off their all-time highs substantially, a C3.ai, was off about 80%. They're still at very healthy multiples. So public markets, we're not as, seeing where we believe the opportunity on the private side going into the summer, and we're already seeing with new targets coming our way, is already getting very compressed.
Okay, thanks. Next question. Can you discuss the mix of tech versus services in your acquisition pipeline?
So our belief is that the services companies that exist globally, which there's a lot of them, some of them are very large, some of them are very wildly successful in terms of their position in the market. Some of them are nuanced and very specialized and focused in verticals. They all have a unique trait, which is critically important to the commercial side of our operation, which is they have the customer's problems in their hands. They have short sales cycles. They can identify the problem, match it with a solution very quickly. And so we see that the services side of the world being critical assets as we scale our commercial engine for the software companies. So it allows us to go get different kinds of software opportunities, either priced right, either fitting nuanced problems, and have the services side sell them in versus independent, cross-overlapping sales teams and software companies attempting to sell. And that's why it takes too long, or takes so long in the software world to get sales done. We want to skip long sales cycles, and we've seen with our efforts so far that this model works way better.
Gotcha. Thank you. Are there any recurring challenges from an integration perspective that you have found that narrows the pool of potential targets?
Yeah, we're ahead of our schedule, even in kind of our brand integration play. Like, we didn't plan on really launching Now Origin, Now Solutions, Now Analytics, which is still under construction, as kind of overarching business units yet. We're moving fast with that because the market's demanding that we kind of really articulate this vertical intelligence story on the commercial side. So the challenges we're seeing is, you get companies that have their own point of presence in the market, their own specialty, and balancing that in our world could be a conflict sometimes. However, I think our network approach, our global position today is very appealing to targets. So I think that's, we're able to get over that now versus probably would have been harder last year than it is today.
Thank you. We're going to take one more question, and we're going to go with what are the gross profit rates you plan to maintain in the future, if you can comment?
In terms of what our margin, what our hopeful, what we hope for our margins to be?
I guess, yeah, that's probably appropriate.
Yeah, I think at scale 23, when we've got the transaction set integrated, the group moving forward, it's north of 100 million revenue. We're on our way to a better capital markets program. I think that the good healthy spot for this business, like I said, is a 60-65% margin window in a 20-25% EBITDA margin business. And obviously we could outperform that if we find a lot more efficiencies, which is coming every day. So I think that's the healthy spot.
Perfect. All right. Well, thank you, Daren. And thank you, everyone who joined today's webinar. Today's webinar recording will soon be made available on NowVertical's website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at nowvertical@rbmilestone.com. Again, that's nowvertical@rbmilestone.com. Thanks again, and you are now free to disconnect.